Good afternoon again. It is Thursday afternoon, April 30th, end of the month today. We are going to do a game plan review again, looking at the stocks from this morning. A little bit of an uneventful day for most of the day, but if you were patient, we got paid in the afternoon. There was some pretty decent longs that set up on the charts, but very, very obvious that the market just caught a sell order in the afternoon, and especially in the market, we got hit pretty hard. One thing we noticed this morning was a lot of the retail stocks were very, very weak. And when I say very weak, we are talking about they are starting a new downtrend from very prolonged uptrends. And very big difference between getting involved when a trend is obvious versus the first time it's rolling over, which is exactly what you can see here. So if we just zoom this out just a little bit, you can see here in Home Depot clearly a very, very good, solid long-term uptrend. And this is really the window that we're talking about. If we get in here and draw some trend lines, we have what is very, very normal, which is the stock goes into a box. And in this case, from a uptrend to a downtrend, you see a double top, you see a lower high, another lower high, and then in this window here, you actually finally get a confirmation of the change of trend. So during this window here, it's a potential change of trend. This ultimately becomes a new trend. So what would the next trade be? Obviously, you're not going to sell short tomorrow. Probabilities are not on your side, but really phenomenal here. We break through, get a flag, hold resistance, and push down. So what would be the next trade? The next trade would be for this to consolidate, bounce up, probably hold this level here right around 112.25 in that area, and then look for another leg down. If that happens, and we are starting to see a lot of similar stocks with very, very similar charts, target there, Kohls, Lowe's, all looking the same way. So it's one thing when one stock does that, but when a large segment of stocks end up doing the same thing, that's significant. That means order flow is flowing into or out of a sector, or in this case, an industry. So definitely something to keep an eye on. It's clear the next day, despite the fact that we held yesterday into the FOMC and kind of had a day where you basically opened and closed in the same area. I think that we spoke today, and every trader worth his salt knows that end of day is controlled by institutions, and we got selling again into the close despite what happened yesterday. So lower opening, held the lower opening. We talk about the opening price every single one of these game plan recaps, and you can see again how significant it is. I usually keep up the 2-day 15-minute here so we can get a really good concept of whether or not a stock is trading outside of the previous day, and you can see there we opened lower, immediately pushed through the previous day's low. You would have expected that level to hold as resistance in this case. However, it didn't, but opening price did, and roughly 210 down to 207.75 at the low, and you start to get some indecision candles down there. So it actually played out pretty well technically, just a question of how aggressive you got in the afternoon. Let me just take this one out of here and show you a very clean signal that we had in the afternoon, which is otherwise known as a descending wedge. And again, these chart patterns are in the context of the higher time frame. That one played out pretty well. So longer time frame here, if I zoom this out a little bit, this is actually a trend line on the weekly chart, which you can see is playing out pretty well. So we came within about 20 cents today of this 207.50 level, maybe, ballpark right around there, and you can see where we were there. So not shocking that we found support where we did. I think the size of the move down and the speed of it probably shocked a little people. Basically a pretty solid hour of selling. So let's get into some of the trades that we had from this morning, especially subscribers of the Game Plan Room. Devon Energy was actually a long call, and you could see why. Very clean breakout. Actually opened higher and never recovered. Remember how we're talking about every single day. Here's the opening price. Never once were we above the opening price right out of the gate, maybe the first couple of minutes. So this would have filtered out what you would have been looking for. And again, let's put this all in perspective. Let's say, for argument's sake, you're coming in today, and it's a good argument because it's the right way to trade. Every single day, you're in this particular stock, you're only looking for a long. So opens up higher, never catches a bid. Now you're looking for a spot to get long. Maybe these indecision candles never starts to trade back up. Maybe this inside candle never breaks out. Eventually get an inside candle here, and only looking long because of the higher time frame, and you get a nice little bounce. You never make it all the way back up to the opening price, so that probably would have meant not looking to really bid aggressively, because intraday you can't even get above today's order flow. And then the market was also selling off heavy in the afternoon. So even though the stock, this is the point, even though the stock sold off, you could have still participated in this roughly $1.40 move. And let's just say you bought it on this 15-minute candle breakout here, which, by the way, is a very common intraday pattern. Inside candle on the 15 in the direction of the higher time frame, 67.70, 68.80. Pretty clean move right there. Whether you held for 90 cents or the full $1.10, doesn't make a difference. The key to the trade management, what you're looking for is long only bias, buying order flow, higher time frame, intraday looking for activity, open higher, never recover, get a signal here, and you're only looking for the long. You're probably not selling the short. Matter of fact, good trading says you're not selling it short because you're only looking for longs here. So Devon Energy did play out, just did not play out cleanly. And interestingly, we had it as over 69 as the buy. It opened up above 69 but never stayed there. Within the first couple of minutes, it immediately sold off, so it would not have triggered a buy unless you were very aggressive and you wanted to trade the breakout. And if you did, you would have ended up taking a loss pretty quickly. Next we have Hasbro. You could clearly see here why it is a long. Holding the gap up very well, just not finding any buyers, but a very, very similar signal to what we just saw in DVN, but this is actually a little different. Same intraday 15-minute candle there. This one's a little different because it actually finally gets it back above the open. So if you didn't buy the breakout here, you could have bought a close back above the opening price, which also coincided with above the previous day and getting back into the previous day's range there. So little move there, not really much to it, but we're not really concerned so much with the exact amount of the P&L. My goal of these meetings is recapping the morning, going over the trades that we called out in the morning game plan meeting, and then looking to see how you could have managed them after the market opened. And that's the entire key. We're focused on identifying good opportunities and how you would have traded them. Let me just pull that back down a little bit. All right, next, we actually did not have any sell shorts from the group. So let's actually go to what we were looking at on a couple of other stocks. Lumber Liquidator, we had below 26. You can clearly see why. First push was higher. Within 45 minutes, by about 10:15 Eastern Time, we actually end up closing below not only the previous day, but also, actually, let me zoom that out a little bit. And let me draw this in so we have context. Again, you want to have 2-day highs and 2-day lows marked in there, especially if you're a full-time trader. So there's the level. Close below it there. Could have took the sell short if you wanted to. Completely up to you. Usually when you get one giant candle in one direction and then completely reverses back in the other direction, more often than not it moves in the direction of the second candle. But again, the entire market pretty much caught a bid here. We're going to take a look at another stock that did exactly the same thing, that was absolutely our best trade of the day, that didn't do anything. But there were two trades that had similar signals. I'm going to introduce you to them next. But essentially what happens here is if you take the sell short after this candle, close below the previous day, close below the open, nothing wrong with that. You just end up getting a melted candle and a bottoming tail here, also a hammer there, and you just don't follow through. This is one of those trades that we talk about often. It was a good trade that just didn't follow through. And again, you might not have had a lot of trade expectation to the short side because of the size of this gap. That's completely understandable. Might not have been the best trade that you had on your board, not your quote-unquote A trade, but again, we're more concerned with the structure of setting up awesome trades, and this was a good sell short. Maybe not great because of the gap from the prior day, but definitely structurally I'm more concerned with walking you through how to actually place the trade. American Express was actually our trade of the day, looking for a sell short. Let me zoom this out a little bit here. You can clearly see here we had a beautiful, beautiful inside day. We've been looking at yesterday. We had a perfect 77 support here. It's the number that we just keep looking at. And look at, lo and behold, intraday, we break it by about, I don't know, what was the price here? 2 cents. Literally 2 cents. So everybody's looking at the 77 level, looking for it to break down. Breaks it through by 2 cents. Probably triggers a bunch of stops, bounces, and then ultimately ends up doing nothing. Now, here's the key that I want to get across to you. This was a technically phenomenal setup, and every reason in the world for it to follow through to the downside. We're breaking down. A lot of other stocks in the sector are strong, and this particular stock is not. So it's got relative weakness to everything else. Everything lined up perfectly. It didn't sell off. Perfectly fine. No big deal. And here's why. Pretty much an identical setup, just a different price point, right? almost as weak, if not a little bit weaker, even though American Express is more of a double bottom. And look what ends up happening. This stock actually breaks through immediately. 115 was the level. Within the first 15 minutes, we get a sell short. Wherever you want it to do it, somewhere in this 114.75, 114.50 area. Again, not so much the dollar amount that it falls through. It's more we want to focus on identifying awesome trades that have stacked in your favor, and that is the whole point of pre-market gaming. You want to make all of your money after hours and then just spend regular market hours executing your plan. That's where all the money's made. Remember, game plan on the sevens, either 7 o'clock at night, 7 o'clock in the morning. That's where all your money's made. So now coming into the day, finally breaks through, pushes through the 115. Now, afternoon, you're saying to yourself, I am only looking to sell short the stock. The other side of the market's completely gone. Market is actually rallying at this point, but you're still only looking for sell shorts. Market actually comes down into what we drew before, the descending wedge. This stock now weak, market getting weak, and you actually end up getting a nice $1 push to the downside. So look, bottom line is one stock did exactly what it's supposed to. The other stock did not follow through. It's more important that you do what you're supposed to do than it is to know what's going to happen next. Knowing what you're going to do and having a plan that has an edge, and then game planning that plan is where consistency in the market comes from. It does not come from forecasting. You're not forecasting anything. You're just paying attention to price action and drawing probabilities of what should happen next, and then you definitely do what you should do based on what should happen. Sounds like a tongue twister, but it's the truth. It's much more important to know what you're going to do than it is to know what's going to happen next. We had a couple of other sell shorts on the list here. Kohls we already mentioned. Clearly see how it's pushing down. Actually, this is something I want to mention here. This area right here, and it actually occurred twice, but today was actually a really good example. A signal or chart pattern that I absolutely love is when you get a stock that sells off 1 or 2 days in a row. In this case here, we had 1, 2, 3, 4 days in a row that were well offered. Even though this one bounced here, well offered means lower low, lower high, lower low, lower high. So this high compared to that high, that low compared to that low. So we had 4 days in a row. So this day, yesterday, closed on the low. So if I wanted to be long this stock, just for argument's sake, or reevaluate whether or not I wanted to be short continuing, I'd be looking at the previous day's low as a support to either bid into or to decide not to be short anymore. So let's take this as two scenarios. If this stock was an uptrend, let's say this happened over here and we opened down here. As the stock closes on its lows yesterday, my game plan would be I'm going to look to bid support at the previous day's low, looking for the stock to reestablish or move back up to where it just came from. If the stock trades down through and trades back up, once it closes above here and flags, then I'm looking for a long again. So two really clean chart patterns for you to put into your database, into your chart book if you keep one, which I highly recommend. And I'd print that one out. Print out Kohls, go over those two trades. Closing week at or near the previous day's low, look for a spot to bid or a reason not to be short. So if it trades back above there, you're not short anymore. So kind of not violates the trade, but gets the trade off the board. Hope this helped. Have an awesome day, and I really hope to see you in the game plan room in the morning.